Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, October 30th. We had a great couple days on the road at Adobe Max in Los Angeles and our WTF Summit in Napa Valley. But today, we are back at it in our New York studio. We've got a bunch of earnings to break down. We'll bring on our Microsoft and our Google reporters. We're also bringing on some big names in venture capital to help us make a sense of the results. Tomasz Tunguz and Bahat are coming on the show. We've then got some more highlights from WTF, including takeaways from our summit with our editor-in-chief and conversations with veteran news anchor Campbell Brown and entrepreneur Lucy Guo. It's going to be a great show and a busy show, so let's get right on into things. Last night, Microsoft and Google were the two biggest AI companies that reported their quarterly results. We're going to get to Meta in just a moment, but I want to bring on our Microsoft reporter, Erin Holmes, and our Google reporter, Erin Wu, to help us make sense of last night's prints. Erin and Erin, welcome to the show. It's great to have the both of you here.
Thanks for having
Great to be here.
I'm going to need to be very specific when I call on each of you to make sure we know who I'm talking about. So I want to start with the results broadly here. Microsoft, we know revenue was up 18%. That was the same as last year. Alphabet revenue growth actually accelerated to 16%. Erin Wu, let's start with you. What is, and I should say, before we get into things, I want to go sort of segment by segment here. We'll talk about the cloud business, and then we'll break down the other segments. Let's start with Google Cloud, Erin Wu. What is driving the growth in the cloud business, and how did that segment perform?
Right. So Google's cloud business is doing really well right now. I do want to caveat that by saying that it is still in third place behind AWS and behind Microsoft, but it's growing really quickly. A lot of that has to do with what Google says is its end-to-end AI stack. So they have everything from chips, they're developing their own tensor processing units or TPUs, and they also are developing their own AI models that they sell through a lot of different things, but primarily through the Vertex platform. And so that is driving a ton of growth in the cloud business. Revenue from the cloud business rose 34% year over year this past quarter, and operating profit did even better, rose a really remarkable 84% this past quarter. And so the cloud business is doing really well.
Right. And as you said, they're kind of in an interesting position here because, like you said, they've got the chips, they've got the models, they also obviously have the cloud business. Erin Holmes, let's come to you. What did we learn about Microsoft's cloud business in Azure?
Yeah, Microsoft also reported really strong cloud growth. It was 40% growth, which was higher than they had previously projected for the quarter. They did say that a lot of that growth came from OpenAI renting Azure servers. And there was a little bit of trepidation from some of the analysts who were on the call asking if Microsoft is, too concentrated in OpenAI as a customer. But the company was also careful to call out that they have several $100 million contracts for the quarter from other customers to try to assuage some of those concerns. And overall, we saw revenue grow at 18%, which is the same rate as the quarter prior.
So that kind of leads us into a nice discussion about CapEx, and CapEx is broadly the story that tends to dominate some of the headlines here for earnings for the big tech companies, including for Meta, which we're going to get to in a moment here. But Erin Wu, what do we know about the CapEx for Google? What are they spending on? They talked about a lot of it being for internal use. What do we know about that?
Yeah, so a lot of Google's CapEx is for internal use. It's for what Google needs to power its own services. The difference between, not to spoil the next segment, this difference between Google or Microsoft as compared to a Meta is there's also the growth of this cloud business. And so a lot of these capital expenditures are to support expenses for the cloud business for Google's customers. And so that's how they're getting a return on their investments from some of this spend. And so Google actually raised its projections to 91 to 93 billion this year. They spent 24 billion on capital expenditures in the third quarter. And so they're spending a ton of money as they continue to invest in AI and grow their cloud business.
Erin Holmes, what did Satya Nadella say on the call last night about its CapEx numbers?
Yeah, I mean, Microsoft is also continuing to accelerate CapEx. We saw it go up 35% to nearly 35 billion this quarter. And the company said it was going to keep accelerating in the coming quarters. They did get a little bit, again, of nervousness from some analysts on the call who were asking, how do you essentially make sure that you're not investing too much in what could be a bubble? And Amy Hood's answer to that was essentially, when we spend money on NVIDIA chips, which is the bulk of the CapEx spending right now, those chips are always pegged to customer rentals for basically the lifespan of the chips. Essentially, the subtext being that even if it is a bubble, Microsoft is still going to be generating enough revenue out of its investments. And separately, the company has said that they're confident that the actual data centers that they're building will be filled and be used for the next 12, 15 years, essentially trying to assuage investors that they're not going to be a bag holder if it does turn out to be a bubble.
Erin, I want to come back to you because YouTube is the other business line that gets a lot of attention when Google reports results. YouTube growth was the fastest that it has been since early 2024, and yet that actually wasn't the biggest headline coming out of the news cycle yesterday. Talk to us a little bit about what was said on the call lesson about YouTube, and then also the news that we have about the restructuring, and there was a memo. Just walk us through it.
Yeah, so the big news about YouTube is that YouTube, like everything else at Google, is trying to adapt to AI and figure out especially how it's dealing with things like Theo, like Google's video generation AI model. The other big news about YouTube, which is of course related to this AI news, is that YouTube announced yesterday a major restructuring of its product teams. Instead of having these teams, which have historically reported to one CPO, they're being broken down now into 3 buckets, essentially, for the viewing experience, for the creator experience, for the subscription experience, the subscription products. And this last one says a lot about how YouTube sees its business growing in terms of moving beyond just an ad-supported models. We're really leaning into things like YouTube TV, which has grown a lot from deals like the NFL for Sunday Ticket.
And we actually had we had some discussion about this at our WTF Summit. What did we learn there?
Yeah, so we had Mary Ellen Coe interviewed by Jessica Lessin as part of the summit. She's YouTube's chief business officer, and she talked a lot about the importance of subscriptions and how that is now a major monetization driver for YouTube, and so as such deserved a senior leader reporting directly to Neil. And so that also played into this reorganization.
And so broadly speaking, I mean, this is a push into subscriptions? Is this because of AI? Well, high level here, I mean, what's the reasoning as to why?
Oh, I mean, the reason as to why high level is that YouTube is trying to find new ways to monetize. And they're like, one of the things we talked about at the creator economy, or not the creator economies, at WTF yesterday, talking about the creator economy, is that all of these streaming services are trying to move into new areas. And so we have Tubi talking about, which is a free streaming service, talking about, we're really more of a YouTube for movies and TV. Or you have Netflix, which has historically been movies and TV, now talking about they're testing a feed of vertical video like inside the app. And then YouTube, which was originally user-generated content, user-uploaded content, now doing more streaming deals like the NFL.
Great. Well, I want to thank you both for coming on. That is Erin Wu and Erin Holmes from our newsroom. And I want to keep our analysis going with our next guest. Tomasz Tunguz is a general partner at Theory Ventures, and he does some great analysis on all things earnings and data and tech in his daily newsletter. Tomasz, welcome back to the show. It's great to have you.
Pleasure to be here. Thanks very much for having me on.
So we talked about Microsoft, we talked about Google, and I'm sure you have thoughts on both of them too, and we'll get to that. But I do want to talk about Meta, because Meta was the other giant company that reported last night, and its stock is actually moving more than the other companies this morning as we tape this. Tell me a little bit about what you made of Mark Zuckerberg's comments last night. The broad story here is he is spending again. Mark Zuckerberg is in investment mode. And we've seen this story play out before with Reality Labs, but high level, what did you make of the earnings last night?
Well, he's being really aggressive. You look at the amount of CapEx compared to, say, Google and Microsoft, and it's basically on par. And so the question is, I think the question for a lot of people is, well, why is he spending that amount of money? You have Larry Page saying, I will go broke before I lose this race. And so there's definitely an existential crisis that they're facing. And the comparison in my mind was, how big is the Azure business compared to how big is the Meta ad business? Because ultimately, a lot of these GPUs that they're spending and the data centers that they're building are primarily for ad products. Yes, they hired Clara Shih to run maybe a potential AI B2B software component. We haven't seen that yet. Maybe there's a reason to believe that that'll be a business, but you're primarily believing that these data centers will be used to power different forms of content generation and different forms of creative generation. And there, the Meta ad business operates at better margins than Microsoft, and business is about 30 to 40% larger than Azure. So, there it's quite interesting. The major difference was a point that Erin talked about a bit before.
Which
Erin Wu.
Erin Wu. Erin Wu.
Yeah, so she mentioned that there's this notion of remaining performance obligations, or what Google calls backlog. And those are customer commitments to spend credits on AI over some particular period of time. And the combination of those two companies yesterday, 555 billion of RPO. The average duration for Microsoft's RPO is 2 years. And so Microsoft has a tremendous sense of confidence in when those dollars will be spent and underpinning the CapEx spend that they're talking about. The ad business is seasonal, right? And it's much more cyclical. It's tied to the economy. And so you may see at some point if there's a slowdown, you may see a bit more volatility there. And so to watch Meta increase their spend and in terms of CapEx be on par with Google and Amazon, and then for Zuckerberg to say next year will be significantly larger. I mean, we're talking like 100, 120 billion. That's pretty significant. The other analysis I did this morning, I was looking at the total cash balance of, say, Google and Microsoft compared to their CapEx spend, and their cash and short-term equivalents are basically equal to the total amount of CapEx spend on an annual basis. It's not to say that they're running out of money on their bank account, but all of these companies will need to raise significant debt to continue to finance these massive build-outs.
And that's certainly not the case with Meta. I mean, Meta has been burning through the cash balance quarter by quarter. We've sort of marched it come down, and meanwhile the CapEx is surging.
That's right. And then you have the virtual reality metaverse division, which is also burning a lot of cash. And so I think the combination of the two injects a lot of or the combination of those two factors plus the lack of RPO and less visibility and predictability into the revenue, it's a little riskier.
Right. I do want to ask you, we have covered Reality Labs in great detail here at The Information and on the tremendous investment that Meta has poured into it. Do you see any sort of parallels or, on the flip side, differences between the investment that Meta is making into its AI business with all the CapEx and the data centers and whatnot, and then Reality Labs? How do you sort of put these two different stories together in your mind?
I think, Meta wants to be the place where everyone is hanging out online, right? And big part of financing that is the ads business. The hardware component, I mean, the Ray-Bans have taken off. I really believe in those glasses. I think that will be a new form factor. And in a sense, they are creating a new category. Their category creation is hugely capital intensive. So you have a ton of CapEx in that category: hardware development, hardware releases, supply chain management, and then also on the data centers, same thing: creation of category, agentic ad systems, massive initial CapEx. And the question that everybody is asking and no one has an answer to is, what will the ultimate multiple on invested capital look like, and will the demand materialize? And look, if the railroads and telecom are any indication, we tend to overbuild. And then there's an inevitable correction. And so I think the market is telling us they are on the precipice of being very uncomfortable.
But before we let you go, ServiceNow is another company that I know you follow closely, and they reported earnings last night. What is your sense of how investors are thinking about this company right now? Because one thing I've been trying to figure out is the company reports earnings every quarter. They seem to be pretty impressive every time, at least in the acute stock market reaction. And I think that was the case today as well. And yet shares are down this year. What do you think people are reacting to here?
I think, as you said, they've been executing really well. They have an AI business that will go from 0 to $500 million in revenue and will double again to next year. They bought MoveWorks, which consolidated a big chunk of that particular market, automating ticket response for internal ticketing systems. It has traded basically within a very narrow band on a multiples basis, on a forward multiples basis, it's not out of band either. I was just looking at the EV to forward revenue multiples, and it's kind of trading where the top quartile, you have a collection of 20% growers that are in the mid to low teens on a forward multiple basis. And so I think it's probably just a stock that is not a meme stock or not sort of the moment. It's not front and center, and people.
It's amazing, isn't it? There are companies out there that are not memes. It's almost like a foreign concept these days.
Right. And so, I ran an analysis earlier this week, and we were looking at the forward multiples across the three top or the 25th, 50th, and 75th quartiles of software companies. And over the last 3 years, they have not moved. They've all traded within the same range. And so what that tells me is very few people are paying attention and making significant either entry decisions or exit decisions into what we like legacy SaaS effectively, even if they have somewhat of an AI story.
I want to ask you one quick question before you go. You talk to a lot of customers, buyers of enterprise software broadly. And one of the discussions that we've been having for the past few weeks on the show is we had Vinod Khosla on the show, and I asked him the question, why are enterprises slow to buying AI right now? What are their hesitations? And one of the things he said is, in his view, they don't have the right people on the ground. Even if they buy the AI software, they don't have the right talent at their company to be able to make use of that software. And I've been posing that question to people, and the flip side of that argument is, well, I can't just replace my entire IT division with AI native people or people who know how to use it. And so that really can't be the reason why we're not getting the full ROI out of it right now. What is your view on that issue here of the people working at these companies and if they have the talent?
Yeah. Look, we're all learning together, right? So every day there's a new model, every day there's a new tool. The universe of people who are AI native is tiny. And so a lot of there's this huge wave of forward deployed engineers where engineers are being staffed to implement software. But I think more of that value is education. 2 of the top 5 generators of AI revenue are consulting companies, Accenture and IBM, and that includes semiconductors and inference. And so we're just in a place where we've seen a seismic shift. We've all received mandates or issued edicts to our teams to implement AI, and we're all figuring it out. I mean, we hosted a dinner with 10 C-level executives about a quarter ago, and we were asking them, how are you implementing AI? And they said, we just run little hackathons, and we expect everybody to be tinkering, and we're all teaching each other. So I think that's one very big and important component of it. And then the second component for the lack of ROI is these systems are really early. You look at the first 3 or 4 years of ChatGPT, it was all about compressing all of human knowledge into a single AI model. And it's only been within really the last 6 months that we're asking these systems to act on our behalf with what we're calling agentic systems, where they can read your email or they can update your task list. And those systems, the accuracy with those systems leaves a lot to be desired. And we're talking 30-40% failure rates, particularly for more complex workflows. And until we improve those accuracies, the ROI is intangible.
Right. Well, Tomasz, I want to thank you for coming on. It is always a great conversation. That is Tomasz Tunguz, a general partner at Theory Ventures. Our next guest is another big name in venture capital. Roy Bahat heads up Bloomberg Beta, the venture fund out of Bloomberg. The company has invested in some high-profile startups like Flexport, Replit, and Lambda Labs. Roy, thanks for coming on the show. It's great to have you here.
Thrilled to be here.
Well, it's the first time that we have you here, and so I do want to get a little bit of an overview on the fund. But very quickly, we had some big earnings last night. Any high-level reflections that you saw as a VC and how it relates to your startup world?
Okay, real talk. I don't pay attention to earnings. We can reflect on them. I've been reading the information. The information stories are useful.
You don't even listen to any of the calls at all.
Why do they matter?
Well, I mean, they give us a pretty good sense of macro. Where companies. You don't buy it.
It is. I think we love invest, and we'll get to talk about the specific earnings in a second. We live in a world where we love to talk about the things that change around us. And, that old Jeff Bezos line about more important to focus on the things that don't change. The, founders, for example, when they're raising money, will always say, hey, what's the market right now? What's hot? What's going on? It's like, you got a great company that's doing well, you will be able to raise money. You got a company that doesn't, You won't. And so, on some level, I think the good story, the real story is AI model usage. And I think that what I see is Google Cloud having great success. I see Gemini feeling like, despite lots of product integration and the model getting much, much better, that consumer usage just isn't there yet. So I was thinking some about that because it's relevant to startups trying to sell in. But other than that, I'm curious what pops for you. We have this general financialization of this moment where everything that touches AI feels like trying to attach it to something. Maybe you saw the story yesterday about the OpenAI, $1 trillion IPO, trying to attach it to any kind of fundamental analysis. I don't know what earnings analysis looks like in this moment anymore. So, right. For better and for worse.
Well, and you're hitting on an interesting point, which was my sort of takeaway from the earnings last night was you've got 3 different companies. They're all AI giants, so to speak, and they all have very different strategies that they're pursuing. Google obviously has the models. It's trying to figure out how it can sort of boost its favor with the enterprise. You've got Meta that is just they're just trying to build something new, and they're investing a lot. And Microsoft, they have the customers clearly with Azure. Now the question is, can they do, can they live up to their customers' expectations now with this new arrangement with OpenAI? And so, really, if anyone tells you that they know what that they know what the right approach is with AI, look at the big 3. They're all doing something totally different.
I think that the lowercase m Meta issue there is how much of the valuation responses when they discuss results are about actual financial results, very little when it comes to AI, obviously, and how much of it is about projection of a potential strategy. It's interesting, Meta, because they've just done this great talent reboot for the last few months, now they sort of get a second opinion moment where everybody's going to think, wait, I don't actually know if I know what to expect financially from Meta with respect to AI over the coming quarters. So they sort of reset the table a little bit. And Microsoft, of course, with that OpenAI transaction, very, very clear that at least financially, we know a big chunk of where that stands, but then that turns on, where OpenAI ends up. So there's a lot of, maybe you saw the Bloomberg chart of all the round trip deals between the big AI companies.
Totally.
We're in one of those moments where everything points at everything else, including among the big companies, if not directly.
So let me ask you this. We saw all the CapEx numbers last night, and this is, like we said earlier in the show, it's the headline that comes out of many of these prints is just how much these companies are pouring into CapEx. A lot of it is to make sure that they're sort of vertically integrated. They have their own data centers. But how do you compete with numbers like that as a startup? How do you advise your startups?
Well, first of all, you can't. One way I look at this is, and it's not a perfect analogy, but I'm old enough to remember the late 90s when the dot-com boom one caused all this telecom build out, all this fiber. So no startup was showing up saying, what am I going to do to control the internet by laying a bunch of fiber? And in a way, the CapEx expenditures, all the power acquisition, the energy acquisition is a lot like that. And the question is, what can you do that rides on top of that allows you to earn a sustained profit? And that's the game, for many startups right now. And the thing I just say is, we're also seeing this confounding thing that happened in the early days of the internet where revenue growth, in the early days of the internet, it was eyeballs and you didn't even have revenue growth, but where revenue growth for startups is not actually as reliable a proxy of progress as it used to be, because so much of it is just being paid out immediately in token costs to the big companies. And so I'm not sure, that's the hunt. The hunt right now is where is my wedge where for relatively low capital, I can try to produce something sustainable. And it's why we're seeing so many different strategies. Everything from companies built on top of the models, trying to use a family of models, and then underneath that, insert their own stuff wherever possible. So Replit is a great example of a company that's in that kind of position. To people going out and buying traditional businesses to try to remake them with AI. I'm watching carefully, for example, what the General Catalyst acquisition of a hospital ends up looking like. And then lots of infrastructure plays around the edges. So we just don't know. It's one of these great periods where everybody's dancing between the toes of giants.
Talk to me about the broad strategy that your fund has. You're focused on the future of work, or going to work, I guess, as it is. No. Why is that a thesis that you're so passionate about, and how does that play out in terms of the companies you're investing in?
Sure. Started early in the life of our fund. And from day one, actually, where the simple realization was that technology had changed our lives as consumers buying things, as people being entertained by media, as friends, as family members. But very simply, it had not really yet changed our daily work experience. And the bet was that it would catch up. And it's a real reversal from historically how technology unfolded. It used to be that the best technology used to go to big enterprises, including the US government. It started the internet, started out as a Department of Defense funded project in academia, and then eventually filters out to the typical person. But we reached this new generation where not only because of the use of devices like mobile phones, but just because the nature of how software is unfolded, a lot of the best stuff started with people, started with end users, with consumers, and then devolved out to work. So it was as simple as that. We didn't anticipate AI. We became the first firm a year after we were created to say we wanted to invest in AI. That was over my objection at the time. I was completely wrong. I just thought it was too early. And so we've been doing that since 2014. We made our first generative AI investment in 2016. And, the work experience is still terrible for many people. They don't like the experience of being at work. They don't feel as productive as they could be. Many people in the economy can't access work that pays them enough, even if they want it. And so as far as I'm concerned, we have enormous investment opportunities. And I think the range of companies we've been involved in, like I could have never guessed that one of the most successful investments we've ever made would be at a shipping broker. And, you mentioned Flexport. We got Masterclass, Weights and Biases, which just sold to CoreWeave, Replit. And so I guess the point I'm just making is up and down the stack of possibilities, there's still a lot we can make better about work.
So on that topic of work, then, where do you stand on this issue of, hey, to what extent is AI going to be able to do people's jobs? What's going to happen with all of this labor and talent? Is it going to get replaced? Where do you stand on that?
Yeah. So first of all, I think it's not.
And maybe before you get it, what I would love to get to, Roy, is I ask this question to people, and people say, well, it's going to be somewhere in the middle. And my follow-up question is,
100% of jobs will be replaced.
Okay, so what are people going to do then?
Yeah. So first of all, I don't think it's the right question just to say. I think the better question is, in a world with AI, just what will work look like in general? What kinds of things will people do? Which is what you were just getting at in your call. The reason I think that's a better question is because AI is a mix of what I call a loom and a crane, two different kinds of technologies. A spinning loom is a technology designed to replace a human weaver. It first augments them by helping them weave faster, but eventually replaces them. A crane, like a construction crane, is a piece of technology that doesn't automate anything. It allows human beings to do something that in the absence of a crane, they could never otherwise do. And AI is both of those at the same time. And that's why, and we tend to imagine replacement because it's just easier to imagine. Eric Brynjolfsson, the economist, we also backed his startup, calls it the Turing trap. And simple answer, the Dodge answer, but it's simple and we can talk more, is it'll replace 100% of jobs because technology always has. If our great-grandparents saw what you and I are doing right now, I don't know where your great-grandparents were. My grandfather lost his eye working in a mine. They'd be like, they're not working. This looks like fun. Nobody's going to get physically harmed. And so, but I think in the West, and particularly in the United States, we redefine whatever it is we do with our days as work.
Figure it out. Figure it out as
and again, I think the real question, though, the challenge is, I'll give you the precise version of it is, what's a job that millions of people can do that will allow them to feed their families? And that doesn't yet exist, or doesn't yet exist in the scale of millions of people. And that's where I just don't know the answer. Will home healthcare aid feed millions of people? I don't know. Will Vibe, ... Who knows? ...
Well, I think that's a good place to wrap it up. Thank you, Roy, for coming on the show. We really appreciate it.
Appreciate it. All right.
Some great insights. We'll have you on soon.
I really appreciate you guys doing this and you having me. Take care.
Of course. That's Roy Bahat from Bloomberg Beta. Okay, Grammarly is getting a new name. The AI-powered writing assistant is rebranding as Superhuman, merging Grammarly with two of its acquired companies, Coda, an all-in-one productivity platform, and Superhuman Mail, an AI-driven email app. Joining me to discuss the company's strategy are Shishir Mehrotra, CEO of Superhuman, and Rahul Vohra, head of Mail. Welcome to the both of you. It's great to have you.
Thank you. Great to be here.
Thanks for having us.
So, and I should say, Shishir, it's your second time on the show. Welcome back, Rahul. It's your first time, so we're excited to have you here. And I'm excited to talk about the new name. By the way, before we get into the new name, wasn't this a prediction, Shishir, that people made that when you bought Superhuman, there was some chatter online saying, oh, this is going to, people were calling this at the outset.
Well, I mean, I think that there were definitely a lot of suggestions for it. I think it's a great name, so it's maybe a surprising pattern because it's not very common to do the elevation of a sub brand into the corporate brand. But it's a fantastic name. We also teased it a bit, and because we wanted to. We can talk more about that, but it actually turns out to be really logistically hard to do a brand swap this way, and so we wanted to get the news out there a little bit as well.
Hard why? Tell us about that.
Oh boy, it's funny. I think I had this analogy I was using with the team. Naming a company is super hard. It's kind of like naming a kid. Renaming a 16-year-old company is like 10x as hard. It's like renaming a 16-year-old kid. And swapping the name of your 16-year-old and your 11-year-old is like 100x as hard. And it means things like you're not only changing a corporate name. If you think about other cases where people have done that, Alphabet and Google or Meta and Facebook, in a lot of those cases, you just put out a blog post and you're kind of done. But in this case, there's a product running on the Superhuman domain. It means a certain Grammarly runs a certain way. And so we needed the whole company to execute. And so what we launched yesterday was, a lot of it is somewhat invisible, but it's a new website, it's a new login system, it's new pricing, it's new everything. And we kind of had to do it with the whole company involved. And to do that, you kind of need the world to have some sense of what's coming. So yeah, it was an interesting process. A little different than I think most renames.
Rahul, you are the one you were acquired, and Superhuman was your baby, and including the name itself that you gave it. But I want to ask you, now that you're sort of operating within the larger Superhuman company, I guess Superhuman, formerly Grammarly, now Superhuman, now it has the different product lines. Talk to me about how that's been different for you, and also how this sort of reflects the changing strategy of the Superhuman company and the product suite more broadly.
Well, I think one of the most interesting things about selling a company to a much larger company, Grammarly, is more than 10 times the size of the employee base, a significantly larger revenue base. As we turn into Superhuman, of course, that continues to be the case, is you can simply do so much more simultaneously. So one of the most exciting things for the team was to be able to invest more in mail, to invest in our roadmap. There was this incredible moment multiple times during the process of acquisition when Shishir and I were comparing roadmap slides, vision slides, and they would even use some of the same terms. We would say things like, we want to build the AI native productivity suite of the future. And there was this moment where I was reflecting to the Superhuman Mail team, whereas a founder, you get to paint these grand pictures and big visions and say, we want to do Act 1, then Act 2, and Act 3. And as the numbers would probably imply, we're probably going to do Act 3 after Act 2 and Act 2 after Act 1. But we're now in the position where we can pursue acts simultaneously. It's one of the most exciting things for a founder.
Better together, as they say. That's always how it goes. Shishir, I want to come to you about this new product that you guys have launched, Superhuman Go, which to me, as best I can see, it's sort of like a browser assistant that helps you sort of work alongside all of your tabs. Is that the best way to describe it?
I think I would think about it a little bit more like the evolution of Grammarly. So Superhuman Go is our new AI assistant product. It's a platform that brings you your own network of proactive and personal AI assistants directly embedded wherever you work. And the core insight really starts with the technology layer of Grammarly. It's what Grammarly really does is it brings proactive embedded AI to over 1 million different applications, websites, web applications, mobile applications, and so on. And we can read, interact, and edit directly in those surfaces. So I don't think thinking about
it's not attached directly to a browser necessarily.
That's one of the ways you can use it. Is it attached to the browser? It also runs as a desktop application, and so you can use it that way as well. You can use it on your mobile phone. It shows up as a keyboard. What the Grammarly team has done is over the years built this foundation we refer to as the AI superhighway that brings AI directly where everybody works, right in their application. So it's a much broader play than just what I think a lot of browser add-ons are doing.
Right.
And it means that, if you think about Grammarly as the agent, the OG agent that works right alongside you, And it's almost like having your high school grammar teacher sitting on your side with a marker and able to help make every piece of writing better and better. We're now enabling a much broader set of agents to do that. So now if you're a salesperson, for example, you might have on one shoulder, you've got your grammar assistant helping you make sure you're writing accurately and getting your tone right. But you also have a sales agent that knows everything about your catalog and tells you you're talking about the wrong product, or your calendar agent tells you you can't meet tomorrow, you can meet the next day. All of those happen right in your surface.
Well, why is it better than the other AI assistants that is out there? Are you betting that your models are better? What's the bet that you're making?
Now, I think in this market, the key bet is the difference between being interruptive and being immersive. And so if you think about the different AI providers out there, many of them are making a bet on changing people's behaviors. There's a set that are focused on what we call the chat experiences. You go to them, you chat with an AI bot, and sometimes that can be an amazing experience, but you have to remember to do it. There's others working on headless automations, go send off these AI agents to go do things on your behalf. Our job is to bring AI directly to where you work. Maybe to give you one fun stat that maybe will help contextualize this, we do over 100 billion LLM calls a week. And that works out to, across about 40 million or so daily active users, works out to a few thousand calls a day. So if you just think about that and say, if you're a really good ChatGPT user, for example, maybe use it a dozen times a day.
Right.
In our case, we're running it every time you press a key, every time you open a new doc, open a new app, we're going to run dozens of AI calls and figure out how to help you where you're actually working. And it's just fundamentally different than having to go to AI.
Rahul, I want to come to you. You operate an email platform. Now, one of the questions I've always had is the privacy element to all this. You obviously have AI reading your emails, being able to make sense of them. And this is not just a Superhuman specific thing. I mean, all these email platforms that are out there, including Gmail for that matter, all these browser assistants or browser tools. I mean, you have to be able to read the emails to take any sort of action related to them. How do you deal with privacy at Superhuman? And is the data stored, or I mean, how does it even work?
Yeah, great question. And as you can imagine, something that has been a top priority for us since day one. Otherwise, we simply wouldn't be where we are today. And so we make several promises to our users. For example, we promise and have stuck steadfast to this, that when you use the software, the data that is your data isn't used by our third-party partners, whether that is OpenAI or whether it's Anthropic or any other model that we might be using in order to train their data. There's also a 0-day retention policy. So of course, I think everyone knows this, if you're going to use AI in or around your email, it will be transmitted to a model, but what we can promise is that it won't be retained and it won't be used to train data. We also promise that we're not going to sell or monetize user content. I think this is something that I know a lot of people here care about, but our product is the software. Our job is to make you brilliant at what you do, no matter what you're doing, whether it's collaborating with a colleague or whether you're producing content. It is not to sell your data. It is not to monetize your content. And I think that sets us apart from quite a lot of other very big companies.
Great. Well, I want to thank you both for coming on. It's always a great conversation. That is Shishir Mehrotra and Rahul Vohra from Superhuman and Superhuman Mail. Okay. The Information wrapped up its 2025 WTF Summit in Napa Valley, California yesterday. Our founder and editor-in-chief, Jessica Lessin, shared some insights from the conference with our VC reporter, Natasha Mascarenhas. Let's listen in on that.
Jessica, you just stepped off the main stage at
Literally,
WTF.
I might kick off my shoes, Natasha. I'm not going to lie. I hope no one can't see them.
I was going to ask, how do you feel first and foremost?
Oh, I'm so excited. This is a real highlight for me. I mean, you like getting to see your readers, talk to them, your whole, the community we've built here, more than 300 amazing women. And I thought we had some fascinating conversations. You did a great job up on the stage. So it's a weird moment because it's like my notes of like stories to write, themes to take advantage of. It's all swirling around in my head.
And you didn't even use notes for most of the interview, so I don't know how you kept it all straight.
I keep them there in case.
Okay,
Someone challenged me on a stat, so I was good. I had
You were like,
them.
I had
went
my
to the
notes.
source. Yeah.
But I remember when we were talking about this event 8 months ago, you were talking about volatility being a key theme.
Yes, absolutely.
Kicked off the night talking about volatility. Now that we're after 2 days of conversations, what's the biggest takeaway on how leaders are navigating that, the craziness of this moment?
I don't know about you, Natasha, but people are optimistic. I mean, not in like a sort of diluted way. I mean, whether it was about AI safety, AI costs, the craziness of competing in venture, it's certainly a challenging time, but I think there was an optimism that shined through. And I think it was, and everyone's going to blur, but I think it was Jenny Kohler, who runs PwC's advisory practice. And someone asked her that question when I was talking to her, and she said something about like remembering the privilege and honor of this work or something like that. So I think there was an optimism through the volatility at the highest level, but also a lot of we don't know yet. We don't know yet. I was sitting down with Rebecca Blumenstein, president of NBC News, and I've known Rebecca for probably decades now. And she's very optimistic about the future of the news business and video. But I felt like on many topics as well, on what, the change in Google search traffic means, what AI means, she was sort of honest. This is going to be the story of our professional lifetimes, and we don't know the answer yet. So that was still there too.
It matches what I was getting from investors as well. Nina Ashadijan from Index was sort of said, if you tell me that you don't have a moat, you don't have defensibility, I'd rather you just say that versus telling me something that's not true. And if it's not true ARR, is it a version of ARR that I can at least understand versus you lying?
That was a great answer. She was basically like, just tell me how you calculated the number and I'll decide. And I thought, and then Lucy Guo, who was one of the co-founders of Scale AI, has now started a creator economy company, Passes. I was pushing her this morning on, okay, you angel invest in startups and AI, like how do you pick winners? And she seemed a little like, I think you're going to have some revenue in 2 years. We'll figure it out. So I think she probably has a more rigorous rubric than that. But, still wide-ranging opinions. But I think investors, they're wising up to the numbers, at least. Although I think it was on when our colleague Steph Palazzolo was interviewing Asha from Microsoft, I believe. We've had a lot of speakers today. And I'm sorry. It was on your panel. You asked about an OpenAI IPO.
Oh, yes. I was like, we have to see, is this going to change the whole market?
And what one of your panelists answers, I thought was a great answer, was like, we'd like to see these numbers because we kind of think they're better than people realize, and that would buoy the whole ecosystem.
Yeah, there's a lot of big moments that people are looking forward to. I also want to just quickly ask too, did you sense a big difference between how big tech was talking about this? We had leaders from Microsoft, YouTube, Netflix, versus the Lucy Guos, the Campbell Browns, who announced, her new startup on stage, Forum AI. Like, did you get a sense of, where, if they differed on where volatility exists in this moment?
It's really interesting, video, to get to that, video was such a huge theme. And I think on the, talking to senior women at Netflix, YouTube, it is a little bit like you get a sense that the ship is steady. Now, of course, I had the opportunity to ask Mary Ellen Coe, who runs YouTube's business, probably an hour after they announced a AI precipitated reorg that came with voluntary buyouts. So, but the message there is definitely sort of business as usual.
Okay.
I also think I didn't feel like the big companies were going out of their way to do like the scrappy startup thing too, to make, which we've seen in other eras. So, but I do think, it's such a wild moment in tech because there's so many unanswered questions, but things are doing well. Things are growing.
Going up to the right.
And so I think that was probably behind a little bit of the optimism.
Okay.
We didn't get into, in many cases, the sort of macroeconomic picture, which I think is the sort of thing that tips the scale at some point that changes the mood. But overall, I think both big and small companies felt like they had a lot of progress to report.
Okay. I mean, last question, if I can put you on the spot.
Yes.
If you had to guess what the theme will be for next year,
My goodness.
for WTF, is there a word that you're at least keeping in the back of your mind as you leave this event and start, I'm sure, planning next year's event?
No, I did. I've been writing down speaker ideas all day long.
How'd it feel
Well,
like?
also because people come up to me and they're like, why isn't so-and-so here? Why isn't so-and-so here? I have been thinking about next year because we're also getting to our year-end prediction time where we do a ton of coverage in the newsroom about that. And I'm kind of feeling like next year is going to remain high on this plateau of sort of on a lot of vectors, like on excitement, on asset prices, on all of these things, but with that sort of macro question in the background. And so I think going into next year, it's going to be really important to start to maybe connect the dots more with some of the economists, market experts kind of outside. We through security, we talked a little bit about the geopolitical landscape and China and all of that. But I think that could come more center stage. But I think there are also going to be like 3 new AI shopping startups up on that stage who probably have billion-dollar seed rounds and, will probably be using their products. So,
and hopefully a few more IPOs to talk about as well.
Yeah, although those are coming. So, but overall, it's been great and really pleased. And you're right, looking forward to next year and really happy that we got so much coverage out on the website for people to kind of check out. And I hope it's really useful beyond the confines of this event.
Yes. Well, I'm excited to get to the happy hour portion. Thank you so much, Jessica, for yet another great year.
You're welcome. Thanks.
Over on the main stage at WTF, Jessica sat down with Lucy Guo, founder and CEO of Passes, a platform that helps creators monetize their brand and keep roughly 90% of their earnings. Here is what she had to say about how creators are using AI.
Creators are actually very against AI tools, I'd say at the moment. But I think it's obvious that AI helps us scale our time. And I think the future and maybe the next 5 years is creators are going to license out their likeness. So instead of having to spend a week working with a brand, flying out, having to, book a hotel, get makeup artists, a videographer, editors, etc., they'll just license out their likeness so they can focus their time on actually creating content and growing their audience. Obviously, they can't do this with every brand because they'll dilute their brand, but I think that it will help them scale their time and brands will end up paying less money per creator and creators will make more money by being able to work with more people because they are scaling their time. But right now, they're just not really trusting of anything related to that because they're
Say more about that.
Yeah.
What's the fear?
So I think there's this idea that tech companies are big and bad and selfish, and that we will end up using their data and they won't earn the cut that they deserve to earn. I also think creators are in a unique place where in tech, we love AI because it makes us more productive, but for them, they're scared about their likeness being used in ways that will tarnish their brands. And we're already seeing, people make deep fakes of creators saying inappropriate things, and they're worried that this will happen if we are able to collect all their data.
Got it. So what needs to happen? I mean, I guess Paris AI, which we heard a little bit about last night, might be a version of this. But what needs to happen to enable that, hey, brand, you can use my likeness. I'm not coming. Probably don't get paid as much as if you showed up. But are we there yet?
I think we need some open-minded creators, and we need one creator to make a lot of money because I think creators are very driven by wealth. I think there's a fascination with tech because of that. Where, after Kylie made her lipstick brand, every creator wanted to start a company, and we're seeing that, right? I think the first creator that's super open-minded, that's able to license out their likeness, and they start making 8-9 figures, other creators will follow suit.
Veteran news anchor and former Meta VP Campbell Brown recently raised $3 million in seed funding to co-found Forum AI, a new company focused on fact-checking AI services like chatbots, with a special emphasis on identifying bias around hot-button issues. Natasha spoke with Brown exclusively at the WTF Summit. Let's listen in on that conversation.
Hi, everyone. I'm Natasha. We are at the WTF Summit. We've had a great day full of panels and discussions, which we're really excited to get into. For now, I have an exclusive interview with Campbell Brown, the founder and CEO of Forum AI. Campbell, thanks for being on TITV.
Love being here. Thank you for having me.
So tell me, let's jump right into it. What is Forum AI and why launch it today?
So this is a startup that I've been quietly working on with a co-founder for about 8 months. We've just come out of stealth and are starting to tell our story. And this came out of, I think, me watching teenagers, I have 2 teenagers, use chatbots for, their primary source of information and recognizing that the information they're getting is sometimes pretty bad. And there's a real need for, especially around complicated subjects, there's a real need for more depth, more clarity, more accuracy, obviously. And so we're focused on trying to do evaluations of the outputs of all the big models on high stakes topics. So think politics, conflict, geopolitics, and even mental health, which, if you have a teenager using these bots to ask mental health questions, the tone is really important in terms of getting it right. So we're first evaluating the outputs of the models, and we do that with AI that we've trained with a network of experts. And the experts are people who, range the spectrum of politics from right to left and everything in between. We've partnered with a lot of Washington think tanks like the Atlantic Council, Manhattan Institute. We partnered with Cleveland Clinic and Mount Sinai and the Stanford Institute for Human-Centered AI. So a lot of academics who can work with us too, who can evaluate what's missing. When you get an output, is there perspective missing? Is there context missing? And then when we find out what this needs in order to be a broader, more balanced perspective, we have experts in the network who can create content and provide some of those answers to really tough questions. So people like Fareed Zakaria and Neil Ferguson talking about geopolitical issues. They both strongly disagree, but they're both intellectually honest. And so, if they were to look at a piece of content, they might say, this needs it has my perspective, but it needs the other side here. And so it's a little bit like peer review.
Okay. Yeah. Walk me through that process a little bit more, because, when I think about that, I think, is there a future where you're going to have a little check mark at the bottom of answers saying approved by Forum AI? Is it more something that's going to be completely invisible, and before we see OpenAI or Anthropic or Perplexity announce their next product, you'll have been behind the scenes? Where does it, how visibly does this show up?
So right now, we're very much behind the scenes, but that's a really interesting question, because you can see where this is kind of headed already in terms of the regulatory environment. The EU is sort of mandating, not sort of, they are mandating bias mitigation. There's lots of talk in Congress on Capitol Hill around how to address bias in the models. But it's not just bias. It's also just getting this, the right tone, the context, the broader picture. Everything is not left and right. And when that's often how it's presented. And I think especially really complicated issues coming from these models, it's a lot more nuanced than that. And what we want to try to do is bring this really diverse expert network into the process so they can bring some of that nuance to the answers.
Is there a certain sort of category of question that you feel like Forum AI specifically excels at, and, an area that you see yourselves needing to get better on, and you see it, being better in the future? I would love to sort of know the here and the future.
So we started with what we thought were going to be the most difficult.
Okay.
But it was also the area that I have the most experience in, which is politics and world affairs.
Okay.
Both that you look at all these data labeling companies that are very successful in Silicon Valley, they stay away from those issues because they're too controversial, and who wants to touch those? And even one of my investors even sort of jokingly said, why are you breaking into jail? Why do you want to do this? And it's because this is important. These are really consequential issues, and we need to make sure that we're getting these right. So we started building the network of people who have a lot of experience in politics. And then from there, world affairs and geopolitics, and partnering with a lot of the think tanks, which got us the breadth and depth that we needed. And then through our conversations with the big AI companies, mental health kept coming up. Is that a lot of teenagers are using these tools to ask difficult questions, especially around mental health. And, you know, you can imagine first the liability issues with that, but also how important the nuance and the tone of that is. It can't just be a step-by-step medical response. It has to really be able to speak to someone who may be in crisis. And so we started, we're working now with Cleveland Clinic and Mount Sinai in trying to address some of those questions, first in the evaluation piece, and then again, providing new content, you know, as needed to try to fill some of those gaps.
And yeah, just to double click on the Cleveland Clinic example, because that's super interesting. Are they approaching you and saying, we use these tools internally and we want to get better answers for our doctors and patients? Or yeah, who is, you know, where is their pressure point from?
So we reached out to them. For all our partners, we reached out to them. And for them, it's very much part of their mission to make sure accurate, good information is out there. And I think most of the think tanks feel the same way. They're generally nonprofits, and they want people to get this right.
Yeah.
And so they were excited by the opportunity because it gave their people a chance to show their stuff. They have been creating lots of content, you know, intended to try to achieve that goal. And I think a lot of us see, you know, that move toward whether it's ChatGPT or Claude or Meta AI or Gemini, whatever you use, is sort of being the go-to for people in the future and wanting to make sure that they're present and that there's attribution there for these more reputable sources and that they're getting highlighted. And you know, one of the big problems the LLMs have, it's not necessarily a shortage of information. It's just more, how do you find the signal in the noise?
Yeah.
And that's what we're trying to help them do, is like looking at the evals and doing like really nuanced labeling that can give them instructions for how to get to a better answer.
Yeah, I mean, and it's not a topic that you are at all a stranger to. Obviously, beyond being a renowned journalist, you were formerly at Meta as the head of news and the VP of media partnerships. From that experience, you know, is there one core learning that you're bringing with you that you can kind of speak to about the way you should approach that conversation with the companies?
Yes, very much so. I mean, we tried so many things at Meta. Some worked, some didn't work. But, you know, from our fact-checking program to, you know, starting Facebook News and working more closely with news organizations, and like working through these issues and trying to get the balance right was really hard. And no one ever thought we did. I don't know if we did, but I'm not ready to stop trying.
Yeah.
So that was partly, you know, inspiration for it. And then being at Meta just as AI started to really explode, and it, you know, the company pivoting its focus to AI, and it becoming really clear to me that where this was headed in terms of it, you know, being a source of information, and seeing both opportunity in that and it being even more important that we get ahead of some of the problems that we had at Meta that we were trying to kind of clean up.
Yeah. I mean, and when we see the kinds of partnerships that already exist between tech companies, AI companies, and media businesses today, I think about the licensing deals. I think about those content partnerships. Is this meant to be complementary to that or competitive to that?
Complementary.
Okay.
I mean, I very much hope that this continues, bringing news partnerships to the table.
You want to see more of those?
Oh, yeah.
Okay.
But I mean, partly because news is struggling to find a business model. And I think those partnerships are pretty critical. But news organizations have a lot of bias, and how do you balance the content that you're getting from news organizations, and who has the expertise to look at that and ensure that when you're generating some AI output, that balance is there. And you know, I have no control over where these chatbots are ultimately going to go. My hope is that it is not the path of the filter bubble, where your whatever your AI of choice is gets to know you so well and only presents you with that one narrow perspective that it knows you want to hear. I'm not that way. I want to see lots of different points of view. I don't want my children to be that way. I want them to, learn from other people who disagree with them. So I want to at least try to have that present and accessible. And for the most part, it seems like the model companies are interested in having that too, which is just the broad, like I said, the depth and breadth of content that's out there.
No, it's a good thing to hear. And obviously you've raised some money, you've hired a team. I'm so excited to check in with you on this, hopefully a year from now, and hear more stories like this. But for now, thank you so much for joining us on TITV Campbell.
Thank you for having me.
That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. Have a great rest of your Thursday. Bye-bye for now.